today's session. So for the November market outlook, just to start with, for a short bit, we'll go through the disclaimer as per usual. So once again, have a look at this, but I just want to highlight that this is prepared by us for general circulation. It does not take into account the specific investment objectives, financial situation, or particular needs of your trade. So you have to take note of what this disclaimer that we have, and we'll go through some of the items for today. And once again, just remind everyone that you are able to ask questions. So please feel free to shout out what any queries that you might have, and I will try to answer all of them as much as I can. So moving on to the webinar today. So for those who have attended past seminars and now this new webinar style, I think generally what I have been through is to go through some of the key events, but for this November outlook, I've slightly structured it differently. So once again, we'll always go through the key events that's going to be due, but in addition to that, we'll try and answer some of the most pressing questions that I do find that's in the market, and any other questions that you might have. If you cannot hear me clearly or something, if you suddenly there's any disruptions, do shout it out to me as well. So a quick recap of October events to start with. So in October, we have had the US Q3 earnings season. That itself did come out largely positive. I mean, of course, in the US, we have had lower expectations in terms of earnings growth, but generally, we do find a good beating of the consensus. And we had the US inflation data. I think that itself had been one that is really prominent. We've seen the data coming at 0.5% month on month for the CPI number. Of course, the core PCE number just came out recently, and that itself largely was in line with expectations, but still very soft, as with what the Fed FOMC did mention to that. So CPI missed the expectations, 0.5% month on month versus the 0.6% that the market expecting. And we saw the US dollar slip into 13 October. We have had the MAS meeting, no change there. Next April may not be the same case. And we have the Singapore Q3 GDP number. That itself had been a strong beat. I think it's reinforced a lot of the confidence for our local Singapore economy, and the Straits Times Index have pretty much taken off as well. The 19th National Party Congress in China, and again, not something that's been doing too much to the market, but for those trading the CSI 300, the Chinese markets, you do find that post that meeting itself at the start of this week, we did have a bit of this ruffling of the feathers as these the authorities themselves stepped back a little in terms of providing some stability in the market. And then we also had the Japanese general election. We know that that's a bet by Prime Minister Shinzo Abe to see his term continue, and that itself really did give us a good result. I think generally nobody was really expecting too much of a surprise over there, but dollar yen did rally very strongly post that results from the elections. And then we also have had the Bank of Canada meeting. I think they have moved twice this year. Economies themselves were not expecting any changes. Of course, the market really reacted that from the dovish tone, and then once again saw the CAD declining, dollar CAD rallies. And then ECB meeting, once again you have another story of the dovish tone coming through from that central bank. So Euro US dollar itself declined. I'll go into a little bit more details later on. And then we have the Q3 GDP from the US dollar index surge. The next two, Bank of Japan and Fed FOMC, pretty much had been non-events. So that brings us to the new month, and coming to November, what are some of these items that we are going to keep an eye out for? Honestly, I would say that this is not one of the most exciting months compared to the ones we have had in September. There was all the monetary policy concerns, and then earnings throughout October it's coming to a tail end, but for November, well, these are the ones to look out for. So these slides were actually made at the start of this week, and of course by today we all know that Wall Street Journal has largely highlighted who might be the Fed chair for the term to take over the Federal Reserve after Janet Yellen ends her term next year. That itself is Governor Jerome Powell, and we did find that the market had largely reacted to that, as well as Asian markets. Asian traders came online. Fed meeting, it's now over, but I think later we're going to have that Bank of England meeting and inflation report. If I think our UK analysts have largely covered this intensively. They're still tweeting much about it. It's going to be due at 8 p.m. later on, so we'll try to wrap up today's webinar as early as we can, and can get back to trading that. But if you want me to go a little bit into some of the details here, feel free to shout it out as well. And then we do have President Trump's Asia trip that's going to come up this Friday for about 11 days. So he's visiting some of the countries, including Japan, China, South Korea, so on, not Singapore. Yeah, and in that case, I think the market impact over here is something that we are going to see to be rather limited. Although anything that he says and you'll be happening during the Asian hours, certainly items to keep a close eye on. But nevertheless, I think most of what we are going to expect from President Donald Trump is some of his rhetoric surrounding North Korea, and some of the risk sentiment for the US dollar and gold may really be something to watch, and I'll be tweeting about it as and when something actually does roll out. And following which, we have the Bank of Japan September meeting minutes, RBA meeting. Not so much of a changes over there. I did put in the US October CPI as one of the items to look out for, because I do think that in terms of what's happening with monetary policy in the US, inflation is really the limiting factor. I'll go into more details later on as well. And of course, the Fed FOMC November meeting minutes, that it's going to pave the way for what we will see in December. And last but not least, the OPEC meeting. So any questions over here? I'll just pause for about 10 seconds. Yeah. If I am speaking a little bit too fast, please let me know as well. I tend to get that feedback, so yeah, feel free to shout out. So for the upcoming events, I think I'll just slightly throwing a little bit of these items. Of course, for the full set of events, you can head on to the IG economic calendar to check out the earnings releases. But in terms of the US earnings, which I think a lot of Singapore traders do trade US companies, we are going to see a little bit of this slowdown in terms of the earnings to come. 71% of the S&P 500 index companies have reported thus far. Facebook Inc. did show their report this morning, and of course we know that I think really for the Asian market, we have Apple Inc.'s earnings coming through on Friday morning here in Singapore, and I think that is going to be quite a key one given how their supply chain really spreads across the Asian region. So by the end of this week, we should have about more than 75% of the companies on the S&P having reported. So do focus on this, do focus on the remaining few for the rest of this month. As we do know, there's this perception that generally the companies that does not have very good earnings tend to wait to the tail end to release their reports. So we really want to see if this trend is something that could continue, and for those, especially those retail sector, that could actually take some wind off the current rally. So follow those items, and yeah, this is where you can look out for some of the earning reports, as I've mentioned in IG Economic Calendar, just to put out the link. And now we'll delve into what moved in the month of October. So this is a quick chart that I actually created at on Monday, and you can see that these are some of the most traded items around IG clients, and in the month of October you can really see that there's this few prominent items. So for example, using the dollar index as a benchmark for how the dollars perform, we can see that the dollar index had actually surged ahead in the past 1 month, and that is deviating from their last year-to-date return, their current year-to-date return. And then when you look into the equity market space, you can find that in the past 1 month, the likes of Dow Jones, the local Singapore Straits Times Index has really uniformly risen. And well, that's also in line with what their year-to-date trend, but it's showing quite a bit of a strong trend in the past 1 month period. And for WTI futures, I'm just going to make a mention of this as well, because we are going to get the OPEC meeting, but in the price movement itself, you can see that in the past 1 month, it's gotten a return of close to 5%, and that's really put the year-to-date return from a decline to increase on a year-to-date basis. So I think that itself really gives us some of the questions that I would like to talk about this webinar, and I think this is something that a lot of people has been really curious about. So first and foremost, will the equity market run really sustain into November? And then following on which, I think a lot of the market has been really curious. Is this debate going on whether the US dollar has essentially reversed? And last but not least, I think really the honorary mention of the upcoming OPEC meeting and what could really happen with crude prices following that meeting on 30th November itself. So once again, any other questions as well, do post it to me and I'll try and address them at the end of the webinar. So we will go on to the first question. Will the equity market run sustain? Okay, so as I've said, this is prepared at the start of this week at the end of October term, and you can see that in the October period, the Dow Jones has really surged above, deviating on the upside from the longer term uptrend and showing this strong pace. It's got this 18.2% year-to-date gains, really impressive. And the one that I really love to talk about a lot more, which is the S&P 500 index, there we get about 14.9%, not as good, but certainly very impressive scores as well. So having said this, what has actually driven the equity market rally? So I think that when you do look into the market, a lot of people will have different perceptions as to what are some of the reasons as to why we are getting this rally coming through. My take on this matter, which I would really think that it's actually due to the fact that we have synchronized global growth. Growth is really quite spectacular, cutting across regions, whether in Europe, Japan, or in the Asian region, or local Singapore market. And then you get that earnings outperformance that tells it. Some will also attribute this to the fact that we have tax reform hopes. Last but not least, the fact that even though advanced economies are slowly entering more tapering of their balance sheets and likely rate rises into next year, I think generally monetary policy is still rather accommodative, especially with the Fed not really pushing it too much yet. So going to the details now. Drivers wise, when you look at the growth number, I borrowed this chart from CT. As you can see over here, the dark blue line, the earnings per share growth on a year-on-year percentage as compared to GDP. Suddenly there's this very strong correlation, and into the end of this year into 2018, suddenly there's expectations for growth to really continue, and that is really brought from the broad-based expectations cutting across many of these sectors as well. And following which, I think there is also this broad-based gain, very prominent, shown using the S&P 500 index once again as an example, given how it's really, I think, one of the very comprehensive index, covers 500 companies across the US market. So what we do have over here is the fact that as the price, which is the white line over here, rises, it's touching record level in Tuesday's session as well, stopping short of a record close. But that compared to the green line, which shortly just explained, it's the advances in the index minus the decliners, that itself has really shown to really trend in line with what the price movement is. And I think in that sense, when you compare to this to previous iterations when the market had crashed, whether this during the dot-com bubble or otherwise, generally the advance minus decliners performance has actually basically dropped ahead of the price decline. So that really shows the overexuberance within the market. And in this current moment, what I think this chart really tries to tell us is that it has not been the case. I'm not ruling out that we could see a correction coming, but I think at this current moment, I don't think we are at that point of stage here with what this market is showing. But at the same time, I would just want to highlight as well, should there actually be a correction, the fact that we are having such broad-based market gains could also mean that decline spreads across the sectors as compared to other iterations where you have maybe sectors that still remain rather resilient. So that could certainly be the case as well. It's hard to tell at this moment with the gains that we are seeing, but certainly things to look out for. And and just previously I've also mentioned, we've certainly seen US 10-year Treasury bond yield topping 2.4%. That's raised a little bit of eyebrows previously, but if you do look at it in the past year, it's still generally subdued and providing good liquidity for the market. And then when it comes to the earnings progress, certainly we do find that this broad-based improvement is certainly continuing into the third quarter results. So just a quick screen grab of this from Bloomberg. If you just take a look at the performance of the various sectors, we have sales surprise coming out at 67% and earnings surprise at 78%. Compared to how things have performed previously in the second quarter, which we have 69.2% for sales and 78% as well for earnings. This is a rather good record. Of course, the hurdle isn't too high a hurdle to cross given the lowered expectations for earnings, but nevertheless we are still getting earnings growth, and that's really supporting the performance in the market currently. And just to sidetrack a little bit as well, we do have sectoral performances that's been showing rather interesting sectoral performance. So the telecoms itself certainly is one that's still lagging. AT&T's results hasn't been one of the best, and on the other hand, we have technology really surging ahead. That itself is seeing the topping of the performance. And when you do look at it in terms of how it's broken into sectoral price performance, certainly we're seeing the IT sector being one to lead in the past 1 month returns, and telecoms lagging behind. So I think for those who really would like to express their opinions with respect to sectoral performance, I think we do have some of the SPDR ETF that's been traded like a stock on the Singapore in IG's website, IG's platform. So keep an eye out for that as well, especially with the energy sector itself likely to see some changes with whatever that's going to happen with crude prices given the OPEC meeting up ahead. So do keep an eye out for those items. So as I said earlier, I certainly do think that the markets still have room to run on the upside given how performance itself is still broad-based and the earnings and growth conditions are supporting it. But on the other hand, I think from the same guys at CD, you have this little bit of warning that's coming through that market prices may have actually priced in this optimism. So when you look at the chart on the right, which compares the 12-month trailing EPS versus the aggregate price of the MSCI USA index, just using, just eyeballing this itself, we can see that that gap itself with prices really surging ahead. So I think that itself may actually warrant a little bit of concern over what could come in to support that price run next. And as I've mentioned earlier, we're coming to the tail end of the earnings. By the end of this week, Friday the 3rd of November, we will have about 75% of the companies more than 75% of the companies on the S&P 500 index having reported their earnings. So what could come in next to support this sustained optimism? Some may argue that, well, tax reform, but just talk a little bit about that later. So seasonality, another mention. So there's really a lot of factors that people are looking at for indication as to how things are performing. And when you look at seasonality, the month for November suddenly looked to be a rather positive one. For the last 4 years, it had actually gave us gains over there. So generally, what would my perception to answer the question as to whether there further upsides? I think at this current moment, the market is really keen to buy in on the dips, and that itself is being supported by both the growth expectations, the earnings performance, and also the tax reform hopes. But nevertheless, I think the market it will be really prudent to put in your safety stops. And I think when you do look at the market, this itself has this horizontal support that is coming through. I'm just going to use the chart to briefly talk about it. It might be easier to refer to here. Yeah, so looking at the S&P 500, which is the US 500 for the on the IG platform, you have that horizontal support that is really coming through around 2,545 levels. But I think what really might trigger my concern is when prices do actually deviate from this longer term uptrend, and perhaps a trailing stop in this extent may be something that works better in this case. But this current, if otherwise, this uptrend momentum certainly seems to have that power to go on. So moving on from here, I think we can talk a little bit. Yeah, so just a quick mention as well over here, should you actually would like to see how some of the momentum goes for the S&P 500 index, or if otherwise any of the weekly updates. This is something that we send out on a weekly basis on Monday. So by the time you end work on Monday here in Singapore, this is something that you can certainly refer to, and we do highlight some of these items as well. Some of the companies, I mean, basically on the index itself that has been showing very strong trend. This is just a quick recap of how the price performance have gone for the ones that I've highlighted. Certainly there are some that doesn't do too well. In this case, FedEx actually saw the decline over there, and HP Inc. But otherwise, well, we do find a quite positive trend for many of those that has actually seen breakouts and continue on their trajectory. So it looks, well, just bring it. It looks like this based on Monday's one. So where we actually highlighted highlights of a few companies, in this case Google for this week, and also Global Payments, which you can keep into consideration for those trading shares. And if you don't, well, this could be somewhere you can start. Well, anyway, just continuing on to the next question that we are looking to answer. I'm just going to pause for 10 seconds again. I want to hear and see if you have any questions for me. So, well, we'll move on to the next part then. So, any anyone who has any strong views on the US dollar currently, please feel free to shout them out loud as well. I think this is something that a lot of the investors and clients have been very invested in, whether the dollar is showing a strong reversal. And I think this is no surprise, especially given how when you look at the dollar index chart, I know this is not the best representation of how the dollar is moving, but measured against the six of its major currencies, you can see that the dollar index has really shown quite a bit of this reversal in the past month and has actually topped that $94 94.0 key level. So I think certainly one to question as to, are we seeing the end of the dollar downturn? Yeah, so why is this really the case that we are having this dollar decline? I'm just going to delve a little bit onto the Euro US dollar action. So as we do know that for the US dollar index, a bulk of it actually originates with the Euro. That itself being one of the strong components in the dollar index, and the fact that the Euro US dollar has significantly shown this decline in the past 1 month has given that dollar index the upside. I think that's really been driving the US dollar. So we have had the German election that itself saw Chancellor Angela Merkel's CDU support waiver and has the need to form that three-way coalition. In comparison, the alternative for Germany, the GFD party, actually gave the market some concern that even Germany itself is really not immune to the fact that populism is on the rise, so that this created a little bit of that decline. And then following on which, in Spain, we have had that Catalonia, well, I shouldn't, well, it's subjective. We had that Catalonia referendum coming through, and in that case, we have had 90% of the votes from the referendum actually backing the leaving of Catalonia from Spain. But any attempts to leave have now been really snuffed out, so we haven't really seen that sending a huge pop to the Euro US dollar, but IBEX itself is really getting quite a bit of this pressure. And last but not least, the October ECB meeting, I think that itself we did see the bond purchase being cut by half, the monthly bond purchase being cut by half, extended to September 2018, certainly what the market has been expecting. But on the other hand, what traders really bite on was the fact that we're not expecting interest, the ECB themselves are not expecting interest rates to rise well past September 2018, and that itself has sent a very strong dovish message to the market. So that did see some of the, well, yeah, that itself actually did see the Euro US dollar sink and giving us this very well pattern where we have this a little bit of this head and shoulder pattern coming through. The shoulder is really forming over here in this short-term downtrend actually being the case. So that itself had really helped to see the US dollar rise. But in terms of whether it actually is something that could sustain into the longer term, that is something that I'm not certainly very sure, given the fact that a lot of this political noise are clearing up and the ECB themselves are still in the longer term on a tightening basis. So moving back to the US dollar, then what exactly is driving that movement? So dollar move catalyst, we have the Fed chair decision. Other central banks' decision plays a part as well, as I've mentioned earlier, the Euro tax reform and growth anticipation, and last but not least, monetary policy. And I highlighted over here, the inflation progress is actually a bottleneck for it, so that is something that you want to see if there's any changes for this current month. Yeah. Once again, if you have any questions, just really shout them out to me and I would absolutely love to answer them. So, moving on here. Okay, so first And for most, I think this was something certainly prepared on Monday. The expectation was for that news to be out on Thursday. It's still going to be out on Thursday at 3 p.m. US and 3 a.m. tomorrow morning in Singapore. But Wall Street Journal has really jumped the gun with their speculation, or at least their source telling them that Governor Jerome Powell will likely take the lead when Federal Reserve Chair Janet Yellen steps down next year in February. I think for the market, we have seen that actually price little bit in as the market get into action. The dollar index on today I think dropped about 0.16%. Yen rose about 0.07% today. Euro showing quite strong actions, and of course the US 10-year Treasury yield had actually slipped as well. And why is this so? Suddenly I think the market, you guys are really quite clear about this, and we've talked about this for a very long time, and this the fact that Governor Jerome Powell is really the representation of the continuity choice. He may be less dovish than Fed Chair Yellen, but between him and the next likely choice, which is economist John Taylor and his Taylor rule, certainly he represents the more dovish option and is giving us the moves that we are seeing today. And in the longer term, how things might pan out, it really does depends on whether we are getting good numbers that's coming through on the economic end, but also a lot depends on what his actions might take. And I think by selecting this current governor as well for the Fed chair position, I think might actually signals a little bit on the President Donald Trump's end for a more dovish rates, low rates in terms of the interest rates. So that itself may actually dispel a little bit of that dollar reversal. Just another note as well, I think just going back a slide, I think this is the mention on tax reform and also the growth anticipation. So tax reform, end of things, certainly we are getting that as well to come alongside the official announcement of the next Fed chair. But I just want to highlight a little bit on some of the views over there. Certainly we are getting quite strong momentum that's been gaining pace with the passing of the budget both through the Senate and also through the House. That itself had really helped to see the dollar index up and also a lot of the equity markets to go up as well. But is this really something that we're going to see that's going to really happen before the end of the year? I think my take on this matter, or at least based on what after reading a lot of the items that people are suggesting, I think I'm a little bit apprehensive as to whether we're going to get that coming through. So why is that so? So the passing of this budget through the Senate and also the House is really just putting that piece of change in just through the door itself. This is really considered the low-hanging fruit. It's not something that's really very difficult per se, and even so, we do not have very strong passing the votes. It did not come in with a strong margin, so I think that's warranting a little bit of a concern. And the discussion itself has not even begun, so this is a little bit like battering between the various parties themselves in the House, and how we're going to see how things pan out, that remains to be seen. And today's tax plan review, which actually is tomorrow Singapore time, will give us a little bit of sense as to what exactly is going to get the debate, and a lot of details such as the estate tax and tax-free exemptions. I think these are all the items that is going to see a lot of resistance. So I mean, if there's any tax experts among the attendees today, feel free to point out and give me your opinion, where I'll share it with the rest as well. But in addition to that, how is the deficit going to be funded as well? I think that will receive quite a bit of resistance. To note that the last time the tax reform has been passed, and of course I wasn't in the market at that point of time, but during Reagan's time when tax reform had to be passed, it took a total of 13 months. So that itself may certainly seem like a hurdle as to us getting that through in this current administration as well. So I think the optimism, while may still be there for tax reform to eventually be passed, may actually see a little bit of the moderation as we do find the hurdles ahead. So in that sense, are we getting a strong conviction on dollar reversal? I do not think that is so. And certainly in terms of the monetary policy wise as compared to US dollar to other of the major central banks. So if you look at this chart here, which I actually drew out from Bloomberg, where we have the end 2017 and end 2018 forecast, generally the market is still expecting all except the ECB, who themselves have actually said that they may not expect interest rate to rise well past September 2018. Yeah, so for the rest of them, we're certainly seeing that expectations for interest rates to rise. But having said that, are we really getting that? I think that's another question. I'll save it for another day. And when it comes back to the Fed themselves, are we getting that interest rate rise as well? I think that brings the focus to inflation. And in previous Federal Reserve meeting, we have had the question of whether the soft inflation data is something that is transitory. If you look at the core PC number, which is also what the Fed used as their inflation benchmark, it has actually slipped even lower into into September here. That's the latest release, my apologies. And you can see that it's really deviating very far from the 2% target that the Fed has. And this is even as the low unemployment itself really remain within the target range. So the inflation itself seems to be that pressure for the market. And I just want to highlight as well so that for the market, for inflation numbers itself, based on I've mentioned this in previous seminars as well. So the inflation rally is something that can be reinforced by expectations, and the number itself is certainly not one to jump up and down as what we see with non-farm payrolls data. So this could actually really tie the Fed's hand back in the upcoming year. So in terms of how that translates to the expectations for monetary policy, certainly just to on a side note, mention that the December hike is something that we are certainly expecting. The market is currently pricing about 92.3% expectation, so not too much of a debate over there. But nevertheless, in terms of how that's panning out in the market, the Fed's view of seeing another 3 hikes for 2018 is certainly a disparity from what we're having in the market, where there is the expectation for only one more hike into 2018. So just to sum it up, generally, are we expecting the US dollar to, is it really a significant reversal over here? Well, definitely on the technical end of things, seeing prices shooting above 94.0 does give it that short-term uptrend view, but nevertheless, the fact is that we have the uncertainty with respect to tax reform, clearance of the political noises in the European region, and also the Fed themselves likely to still see that inflation tying their hands back. I don't think that this is the case. So look for any reversals over here for the dollar index, in my opinion, and other pairs as well. Do keep a lookout as well. Yeah, so that is I would say, the slightly longer term view. But for the short term, if you do believe in seasonality, this is one chart to look out for. This is one trend to look out for. And for November, certainly it does seem like a good month for the dollar index. And in the past year, where we did get to 3.3 and 3.1%, that is due to the expectations of tightening from the Federal Reserve. But this year around, we certainly do not find the market too convinced in terms of whether the Fed will raise rates much further. Last start of 2017, we certainly expected that to be 4 rate hikes. Not getting that 3 is not too bad, but are we really getting 3 next year? I think that itself is going to put a little bit of apprehension in the Fed minutes coming out into the end of this month. Want to look out for the longer term inflation views as well. So any questions over here? I know that I'm rattling on, and I'll try to pause if you have any questions to ask me. I know it's a lot on the fundamental end of things. And I'm trying to highlight a few levels here and there, but if you have any questions, do let me know. Okay, and we'll move on to the last question for today. I feel that this is something that I really want to talk about, since that this is probably the key event other than the boring stuff that, well, not boring, but like the very usual stuff that we have had with monetary policy, and that is what's happening with the crude oil market. So how many, if there's anyone who trades crude market here, happy to see a show of hands. Anyone who actually trades crude market, whether it's US crude or Brent crude? Not so much. Okay, perhaps I might interest you a little bit with today's webinar. So if you've been trading this market, you find that there has been this very strong trend cutting through, especially since the start of September through to October as well. Yeah, so interesting. Leonard actually mentioned that he doesn't trade, using as indicator. Well, if you're trading the CAD, this is of course one interesting one to look at, of course. But yeah, like I said at the start of this webinar, monetary policy does seem to play a stronger part perhaps this current month. But anyway, so thanks for that. Back to the prices. So you can see that there's this very strong surge seen in WTI futures or US crude for those trading with IG, and this trend, oh, come on, slides move. Okay, yeah, this trend certainly seems to be the case as well with Brent crude, and I think that is I've seen that top over the prices topping over the $60 mark is certainly a very strong trend cutting across the markets over there. So I think what has been underpinning some of this, okay, just one more chart over here, that we do see that the market has certainly been very piling in a lot of their bullish bets as well. This is an indication of the number of bullish contracts, net bullish contracts on the WTI futures based on the CFTC commitment of trader report in green. You can see that it's actually trending up once again over here. And why is that the case? I think that you can see that based on the orange line over here, the US oil rig based on Baker Hughes account over here, you can see that since somewhere probably into August that it's been on the downtrend, and that's been really supporting that rise in terms of the crude prices. And in addition to that, those who have probably followed this key event as well for the crude market, you do find that the Saudi king has made a trip to Russia, to Moscow, and in his very beautiful plane with his entourage and that gold-plated escalator, which kind of broke down, a little bit embarrassing, but yeah, it was a very interesting event. But what it really marks for the market is that there's this strong consensus that seems to be spread between these two major producers of oil, one within the OPEC, one not within the OPEC, Russia, and that in recent rhetoric, of course, we have also heard from both parties that they have reaffirmed some of their consensus, and OPEC sources did also point out that OPEC is likely to keep its supply curb in place for the whole of 2018, and that is after their March 2018 output or 2018 expiry. So on one hand, you have that reaffirmation coming through from the OPEC. On the other hand, you have receding crude production within the US. That's certainly doing quite well for the shorting down the supply and building the optimism. And when you look at the OPEC production, likewise, this is the case. I've taken this from Bloomberg. You can see that prices itself had actually slipped, production itself had actually slipped recently, so showing better compliance. Of course, somewhere in this early part of this year there was a bit of concern, but so far it's been actually on the decline once again. So I think a lot of this hinges on the fact on what are we going to get out of the November 30th meeting. I think a lot of the market participants are generally expecting there to be a extension to the curve, but on the longer term, I mean, certainly I think a lot of the people do highlight there's also problems with respect to compliance and the fact that we have countries like Nigeria and Libya within the OPEC also being exempted from the they are being exempted from the current output curb agreement. So how much does this curb itself actually do for OPEC? And you can see that Nigeria and Libya are not exactly that low down in the list as well, so that could actually bring some concerns. But nevertheless, as of currently, we have Venezuela itself falling due to US sanctions, Nigeria and Libya still getting some supply disruption, but the stronghold, Saudi Arabia, the big brother within OPEC, still expect to maintain their output and do see $60 oil being a floor for next year. So could that really be the case? I would say that it's really hard to tell at this moment, but for this upcoming meeting, what are we going to expect? Seasonality, just want to highlight as well a little bit to take this into consideration before I give you my conclusion. Seasonality itself does see that increase in the past 2 months, September, October, the first consecutive back-to-back monthly gains for prices. But overall, in that period of time, you do find that prices been one to be on the decline seasonally throughout the October towards December period. So I think what we have this year is the fact that we are getting prices that's been deviating from trend. In May itself, this driving season, it should bode well for increasing demand, but concerns had actually concerns with regards to compliance had actually outweighed these seasonal effects, and therefore we do find prices actually sliding. So I think that what I'm trying to say for this year is that prices generally do not really go according to trend, and therefore may actually bring the question on whether oil prices are going to sustain back to how the OPEC agreement is going to be like. Last year, this coming meeting in November marks the 1-year anniversary from last November when the curve was first put into place. That itself gave rise to the November surge here, which is in at 5.5%. Very strong, prominent performance for the market itself that had actually brought about a surge in prices. But nevertheless, for this upcoming meeting, I do think that the point is it's going to be very different because the market is generally expecting that to happen already. And in this case, it's really sent prices up to this level, this pretty high level here for US crude, seeing that strong resistance. And I think, based on past OPEC meetings, I think the market had really been one to buy on rumor and sell on news. So do put in some of those buy orders below resistance, and I think this may be where we can see that strong trend coming through. So just want to highlight that to you guys, and well, hopefully this will provide some inspiration for this November month and give you some insights into some of the pressing questions that we have within the market. Yeah, so just to sum up a little bit on the questions that we have asked, and sort of answered today. We have that 3 questions coming through. The first on whether equities will continue running. I think my view on that matter is that economic growth and earnings currently do support that. That has been supporting, and certainly is the case. US Q3 GDP daily surprise on the upside as well, with 3% quarter-on-quarter growth. So that's not going to give us a change. However, after the earnings season, with that coming to an end, what may be the next catalyst if tax reform doesn't come through that's going to put in concerns. So I think that's where you may actually want to put watch some of your key resistance level, and be ready to trade any of the downtrend should it come along. That itself may really be one that's fast and furious. And then on the second part, on whether the dollar index has essentially made a reversal, I certainly do not agree, and I've given you my reasons earlier, whether in terms of the tax reform plan, it's going to take a long time to pan out, the Federal Reserve's inflation holding their hands tight. And last but not least, we also did talk about the crude market today, certainly finding that prices itself has been built up based on this trend with respect to US production, or the anticipation for extension to the curve. But nevertheless, you know, they're warning us to buy the rumor, sell the news, and that itself could really see some sort of reversal should that actually come true. But once again, don't just see that as a perception. It may be the bias that I give you, but do look at price action and any of the tipping through of the resistance and support levels to really put that trade into action. So that's about everything from me today. Thanks so much for being here to attend the webinar, and just stick around for a couple of minutes. If you have any questions, I'll be happy to answer them. But otherwise, you can ask me whether through Twitter or email it to education@ig.com. We'll be .com.sg, happy to answer them for you.